The cost of purchasing a home is getting to be very expensive with home prices and interest rates, and the current 30-year mortgage average is almost 8%. There is something that you can do to possibly keep your monthly payment much lower when purchasing a home. For example, within the last week I have found multiple homes for sale with potentially a less than 4% interest rate, and I even found one with a 2.25% interest rate, and this is possible through what's called an assumable loan. If you're going to purchase a home, an assumable loan could potentially save you hundreds or even thousands of dollars every month, depending on the size of your loan. And for sellers with an assumable loan, it is possible that you will get more money for your home if you have an assumable loan, and you market it accordingly. I'm a real estate agent and not a lender, so you will need to verify this information with a lender, but I make these videos to help people that want to buy or sell a home in South Carolina. Loan assumptions could potentially help both buyers and sellers, and the majority of people don't know about them. Most government-backed loans, including FHA, VA, and USDA, qualify for loan assumption, but the buyers will need to qualify to assume the loan, and it will need to be approved by the lender that the loan is with. If you currently have one of these loans and are considering selling your home, talk to your lender and ask what steps you need to take to have someone assume the loan. There will likely be a loan assumption packet that they will need to send to you. Not all loans are assumable. For example, most conventional loans are not assumable because they have a due on sale clause, meaning you need to pay off the loan when you sell the property. Let's go over assumable loans, along with some pros and cons of assumable loans. An assumable loan is basically what it sounds like. You're assuming someone's current loan and you're taking over their loan payments and interest rate. But you will need to pay off the equity in the home, which is why it's not an option for everyone. For example, let's say someone is selling a home that they purchased in 2021, they still owe $360,000 on the loan. They have an FHA assumable loan at 3.75%, and they are currently listing the home for $425,000. If you purchase that home at the list price, you will need to pay off the difference between the purchase price and the amount you are assuming, which is $65,000 in this case. I have seen multiple assumable loans with more equity than this and a few with less. I recently saw a home with a 6% assumable loan that was listed for nearly the same price they purchased it a year ago. A 6% rate is not low when comparing it to the rates from a couple years ago, but it is much more affordable than the close to 8% interest rate that we have today. The majority of the assumable loans out there are either FHA or VA. So for buyers, if you were in the military or are active duty and you have VA loan eligibility, there will be a lot more options for you if you want to assume a loan. For buyers without VA eligibility, it will probably be easiest to find a property with a FHA assumable loan. However, in rare instances, you may be able to assume a VA loan. Most people that are selling a property with a VA assumable loan prefer to sell to someone else with VA eligibility as well, because they want to keep their eligibility if they choose to buy another property. But you may find someone that is willing to give up their eligibility and let a civilian without VA eligibility assume their loan. This is rare, but I have seen someone willing to do this recently. The assumable loan that I saw for 2.25% was a VA loan, and according to the listing agent, that person was willing to give up their VA eligibility. So let's go over some pros and cons of assumable loans for buyers and sellers. The biggest con is there are some hoops that you will need to jump through, and this can be a somewhat lengthy process. You may need an extended closing period, and I have heard of some VA loan assumptions taking 60 days or longer to close. For FHA loans, according to this document at HUD.gov, the assumption creditworthiness review process must be completed within 45 days from the date the lender receives all necessary documents. So an FHA loan assumption may take a while as well. Talk to your lender and real estate agent to see how long of a closing period you will need. You could potentially have a home under contract for a long period of time, and in some situations it may not close if the lender does not approve the loan assumption. Another con for buyers is there is a limited market for assumable loans, especially if you don't have VA eligibility. There are not that many homes for sale currently with an FHA assumable loan, but you can contact me and I'll send you a list of properties. For sellers, you also want to get a release of liability from the lender if you let someone assume your loan. You don't want to be responsible for the loan if the buyer stops making payments, so make sure to talk to your lender about your responsibilities and liability. So let's go over some pros of assuming a loan. For sellers, as I mentioned earlier, it's possible that you will get more money for your home if you let someone assume the loan. For buyers, you can potentially have a much lower interest rate and monthly payment. There are also usually very little closing costs for loan assumptions, but check with the lender. You also have a reduced length of your loan, since the seller has been paying it for a period of time. For example, if the seller took out a 30-year loan and has been making the minimum payments for 5 years when you assume the loan, you will have 25 years left of payments. A lot of people don't know about assumable loans, and loan servicers don't have a lot of experience with these either, since they have been relatively rare. With interest rates rising, loan assumptions will likely be much more common in the future. If you'd like to contact me about buying or selling a home with an assumable loan, you can call or text me at 843-769-1836, email me at markgarrisonrealestate@gmail.com, or visit my website at garrisoncharleston.com. You can also scan this QR code on your phone for my contact information. The real estate brokerage that I am with has agents in South Carolina, North Carolina, Georgia, and Florida, so either I can help you buy or sell a home with an assumable loan in the Charleston area, or I can refer you to another agent that can help you if you're looking somewhere else. Thanks for watching.